MMTs, we're gathered here today, 6/21 of 2012 at 12:51 p.m. Pacific Standard Time. One of the things that we want to be coherent about is the weekly S&P 500 chart. And once again, just to recap today is that when that original reversal that we sold short up here, that yes, we called the bottom, and yes, having up and out of the money to these resistance levels, right where that trend line. And we hit that. We went from the negative delta. We had about a 100-point move from this bottom when we were getting in, up and out of the money, and then kabam, today, they got a 28 handle haircut down to that 1327. That is a weekly moving average declining in value. That was the first week. That's our second week. And then we got right up here where we said, and the put side, the put and call side, we use it for when real bottoms are going to get put in using austerity packages and Bernanke's and central bankers of the world, that there is a procedure per se in weekly, yearly reversals. So on that S&P, we got that upside at that bottom, and it ran almost 100 points, really close to it for that upside trend, right into that dead wall of resistance. And that's where the put side was the cheapest side at that time to make your transactions on the S&P 500 index. And I can just tell you that some of these 1325 puts are paying some of our market makers that we have in our programs. Look at that up $8 market, but look at the low close, marked it down, and then printing up here toward the high, 1490 by 1710, and that's on that 1325 put. 1,087 contracts traded on that S&P, and here's that haircut, and here's that weekly reversal where the put side was deflated in price at resistance. And understanding that when we were down here, that just the opposite, that the call side was very deflated and up and out of the money with all of their banking crises and resolutions. Well, they're not having such a great resolution, and all the speculation on QE3 a week ago that ran these up here into these weekly moving averages. And let me tell you something, that declining 10-week, 1, 2, 3, 4, 5, 6, 7th week, and the 10-week is still falling. And yes, it's a bear reversal trend, but every bear reversal trend has an upside to resistance levels, as you see, and have experienced and gone through. And the value of that in that option market, buying wholesale and getting marked up, but getting on both sides. I mean, it's all here. But let me tell you something. The problem is that you're not out of the bear reversal because you still remain below the 10-week simple moving average and the 20, no matter what. And yes, that's the bottom. And yes, that volatility, remember the volatility, the upside volatility from the reversal, that's this upside volatility, and it's over, but it's quite common to come down and test. And there'll be more resolutions around the corner with central bankers around the world, with the ECB next week, and all kinds of things that are going to be going down again. So when we get these pullbacks, after you have that first rally to resistance and you get that first good haircut in volatility on the pullback, then we look at how to get that lower end at the support level based on that. The call side will come back down again, and we'll get ready to get in it. So once again, it's still in a bear reversal, and it's an upside reversal to the original bear trend that the S&P is in, and it is in it right now. So, and that means that the wall of resistance played itself. So these are how bottoms are put in from corrections. This is the part of the volatility. Sometimes they come, sometimes they don't. But I can tell you that the weekly sell bar right here is we're going to monitor that because tomorrow's Friday, and you can see how that resistance and that you can see the amount of selling as of the closing bell in 4 minutes, 12:56 p.m. And this is on the S&P 500. And we'll be looking for the lower support levels and which way the market's set up. Once again, they're not done trying to come to resolutions. They didn't like the Bernanke story because they didn't get their welfare handout right away with QE3. We all know that. And they use that as a rumor to run them to these resistance levels, and we know that. And now they're getting a pullback from all of that hype that was created off of these weeks. This was your third week. It did, but it made it today, and the selling increased, and the headlines were out on the wires. I don't even know how the internet can keep up these days with the amount of headlines, and everybody is talking about everything. So the fear factor that was complacent, people had no fear during this rally. And this is what happens. Bam. And the downside daily, this is a big good sell day. That selling day is greater than the other days when we had the real big breakout days. So basically, as far as I'm concerned, across the board, when I see the Nasdaq Composite, this is where the shorts are working wonderful. And that's all within the trend cycle of the S&P 500, still in a bearish mode. Buy lower at the support levels and play the headline news. Trade it. Make it